Oil stocks usually look cheapest right before the cycle turns. And today, Chord Energy checks almost every box value investors look for: strong cash flow, long reserve life, and disciplined capital returns. In this video, I'm going to walk through Chord Energy from the ground up, starting with what assets they own and ending with what the business should be worth. Let's get started. Chord Energy is a U.S. oil and gas exploration and production company. They mainly own operational assets in the Williston Basin in North Dakota and Montana, and non-operational assets in the Marcellus Basin in Pennsylvania. In 2024, they produced around 85 million barrels of oil equivalent. That is roughly 232,000 barrels per day. Around 57% of it's oil, 19% is natural gas liquids, and 24% is natural gas. Right now, they produce around 282,000 barrels of oil equivalent per day. This gain was a result of Enerplus acquisition that closed mid last year in 2025. As of end of 2024, they have around 883 million barrels of oil equivalent per day left in the approved reserves. 57% of it is oil, around 19% is natural gas liquids, and 24% is natural gas. Based on their 2024 annual production number and total proved reserves, they have around 10 years of production remaining. On September 15, 2025, they made an offer to acquire assets in Williston Basin for $550 million, which was funded by cash on hand and debt. These assets produce around 9,000 barrels of oil equivalent per day, and 78% of it being oil. This deal is expected to close by the end of year 2025. Moving on to their balance sheet. As of end of Q3 2025, they have around $1.5 billion in long-term debt and $630 million of cash on hand. Their next debt maturity is in 2030 for $750 million and another $750 million in 2033. There is still a lot of time left, which is great. They have a total liquidity of $2.1 billion that's available through revolver availability and cash on hand. Let's look at their profitability. In the last 12 months, they have made around $2.2 billion in operating cash flow, spent around $1.35 billion on capital expenditures, and made $855 million in free cash flow. Chord does pay a dividend of $5.20 per share annually. With around 57 million shares outstanding, it will be around $300 million annually for the dividend, around 35% of their free cash flow in 2024. In 2024, executive compensation performance is 20% on sustainability, 40% on free cash flow generation, 10% on profitability, and the remaining 30% is on advancing strategic priorities. I personally love this because everything is tied to business fundamentals, not stock price performance. Moving on to insider activities in the last 2 years. There have been 2 direct buying transactions by insider. Both of it were by their director Samantha. One was on November 7th, 2025 for 1,250 shares at a price of $85.50 per share. And the other one was on August 23rd in 2024 for 500 shares at a price around $149 per share. Let's look at their valuation. First, we will look at it based on net asset value. For net asset value, I'm going to use 2024's PV10 minus other liabilities such as asset retirement obligations, other liabilities, and net debt on balance sheet. Looking at their balance sheet, it will be $10.2 billion minus $400 million minus 6.4 million minus 849 million, which is around 9 billion at the end. As of end of Q3 2025, they have around 57 million shares outstanding. If you divide 9 billion by 57 million, you will get around $157 per share. As of end of December 31st, 2025, the stock was trading at $92.72 per share. Therefore, it's only trading at around 58% of its net asset value. Now, let's look at the valuation based on last 12 months free cash flow multiples from an enterprise value perspective. In the last 12 months, they made around $855 million in free cash flow. Based on 15 times multiple, the company's enterprise value should be $12.82 billion. Right now, its enterprise value is around $6 billion. Looking at this number, it is basically trading at around 50% of its fair value. Looking at these two numbers, the company looks to be massively undervalued. However, one thing to keep in mind is that these are backward-looking numbers. It is where the puck was at, not necessarily where the puck might go in the future. At the end of the day, this is an oil and gas commodity business. The incomes are directly tied to the commodity price. If the commodity price explodes in the coming years, profits can also explode, and vice versa as well. Knowing that it's massively undervalued gives us a huge margin of safety, which makes this a great heads I win big and tails I don't lose much bet. I personally believe we're probably at or near the bottom of the oil cycle. Thus, there are more upside risks than downside risk. Going forward, the management are committed to return at least 75% of free cash flow back to shareholders through dividend, share buybacks, and opportunistic M&As to enhance shareholder value. Let's do a recap of things that I like and dislike. Things that I like are 1. Great management team that are disciplined and really know what they're doing. 2. Executive performance metrics are tied to business fundamentals, not stock prices. The only thing that I dislike is that people in the executive team doesn't own that many shares of the company. However, it's not really a big deal since their performance metrics are tied to business fundamentals. That wraps up our deep dive for Chord Energy. Please let me know if you have any questions or thoughts in the comments below. If you find this helpful, please click the like button below. It will really help me and support the channel. Also, don't forget to subscribe if you haven't done so you don't miss my future deep dives like this. Thank you and have a great day.